The way I'm living, no one can stop.
Right, good afternoon, everybody. It's very nice to see you all here. Welcome to Bookkeeping Made Easy. This is all about navigating your numbers with confidence. So it's all about actually understanding what your bookkeeping means. There is so much terminology that can be used, and it means absolutely nothing to most of us, including accountants. We just like to throw these buzzwords in. And I am a great one for trying to simplify it, put it into everyday language so everyone can understand what we're talking about. So before I get going, can everyone just pop in the chat that they can hear me, whether you are live on the Zoom call or on Facebook? And if you can let me know whether you are watching live, if you just do hashtag live or hashtag replay, that would be amazing. Now, I will be starting in just a couple of moments. But in the meantime, if you've got any questions on the way through, just put them in the chat. I've got both of the chat boxes open and I will answer them the best I can. And if it's something I can't answer in the webinar, I will let you know and then I'll connect with you afterwards to answer it. Because the last thing I would hate to do is give you the wrong piece of advice. Now, let's get going. So, hi, my name is Harriet Eilott. I am a financial coach and an accountant. I specialise in small businesses and micro businesses that are just starting up and help them actually get where they want to go. So I start people on their journey. And one of the biggest things that I always find is bookkeeping is top of what gets confused, forgotten, misunderstood, everything that you would think of that we all get so engrossed in doing. Oh, sorry, I'm getting every message under the sun up now. There we go. So bookkeeping is one of those things that gets very easily forgotten. We get on with running our business. We actually forget about the fact that we've got tax returns to file and everything like that. We leave it to the last minute, mad dash, we've lost half the receipts. And it doesn't need to be like that. It can be really simple and it can take you minutes every week to actually keep on top of it and actually use those numbers to get somewhere with your business. Actually use those numbers to say, yes, I'm on the right track, or I'm spending too much on this, or I'm not spending enough on this, or I'm not charging enough, which is a very common one. So let's get going by actually looking at what is bookkeeping. So bookkeeping in its very simple essence is actually just recording everything that's going on in your business. So it's recording all your customer details, it's recording what you've invoiced them or quotes that you've sent to them, it's recording everything you've spent out, be it on cash, a credit card, your bank account. It really is just everything financial to do with your business. But there's so much else that can go on with your bookkeeping. There is all your customer details, as I said. How would it feel to you if your bookkeeping system actually spoke to your CRM? So all of your customer data was in every system, so you could find it really easily, which, let's face it, when you're on the phone, you need, or talking to a client, you need all that information right at your fingertips. And bookkeeping is actually powerful enough to be able to do that. It can give you that professional appearance to your customers just from as simple as having a really good invoice layout or a really good process and all the touchy-feely stuff that customers actually like, that make them feel special, that make them feel like you know what you're doing, you've done this before, even if it's your very first sale, and you are just doing amazingly well. Hang on 2 seconds, sorry, I've just got to, there we go. There we go. Right, sorry, just had a little bit of noise in the background there. Now, so bookkeeping really is just that recording, and how you record it is entirely up to you. Obviously, if you have, if you are at a turnover where you have to report certain taxes on a regular basis, then you're going to need, sorry, I've got a bit of feedback this end, so just bear with me so I can actually sort this out. Oh, there we go. That's the one I'm after. No. There we go. I think I've sorted it. Perfect. Sorry, it's very difficult to hear when you can hear yourself in the background. So anyway, where was I? So yes, bookkeeping. So how you record it is basically up to you. There's loads of ways we can do it. It can be something as simple as a spreadsheet or an accounts book. I have a couple of clients where I get an accounts book from them every year, written in pencil, all laid out neatly. And I love doing those ones. They are, for them, actually writing it down helps them control their business. They can see what they've had in and they can see what they've had out. For others, it's a spreadsheet. For some people, it's software. Sometimes you have to use the software because you have to do certain reporting. Now, you'll see from the slide, I use Xero. All my courses that I do, whether it's on the accounting side or the coaching side, I always focus on Xero because I've been doing this a long time. I have used everything from the DOS version of Sage up to the online version of Sage. I've used the desktop version of QuickBooks on through. I've used cash flow. I've used, oh my goodness, I could list far too many. And the one that has always served and always done what customer needs and always had the robustness behind it has been Xero. So that is my personal preference. But when you are looking for software, you really do need to find something that's going to work for you and going to work for what you need it to. So it doesn't matter how you record it, as long as you are recording it. And then you have to decide, are you going to record it or are you going to get someone else to record it? Now, it can get very confused sometimes when you're doing your books, especially when you're first starting out, as to how much of this you want to do and what other people do. So if you do DIY, obviously that's you doing everything. Quite easy, exactly what it says on the tin. But then you've got, what is the difference between a bookkeeper and accountant? Now, a bookkeeper just records your transactions. They reconcile your bank account for you and they get everything ready to go to an accountant. And your accountant is who will do all your tax filings and your accounts and everything. They do the final stuff. In the UK, most accountants do bookkeeping as well. So you've really got to make a decision on your available funds, how much you want to do yourself. Do you have time to do it yourself? Do you have the knowledge to do it yourself? And if you don't have the knowledge, do you have the want to go and learn how to do it? It is a very rewarding thing to do your own bookkeeping. And I always say it's a great place to start because you actually keep your finger on the pulse of the business. But if you are doing it yourself, there are a few things you have to remember. There are lots of words and phrases that are very different to what you think they are. We all like to use these gobbledygook words and terminology, and sometimes you just need it put into simple language, which we're going to do in this presentation. You also need to do your research. You need to make sure that you can actually do what it is you set out to do. Now, when you're first starting it out, it is generally as simple as recording your income and recording your outgoings. And that is as much as you need. But if you are growing rapidly, we need to make sure that you've got things in place. So you have to do your research to make sure if you choose a software system or if you choose if you choose an invoicing system and you're going to record everything in a spreadsheet, have you got it in place so that it's actually going to stay with you? Can it follow you through as your business grows? Or are you going to have to keep changing systems? Because that is costly, and both in money and time. Another thing you need to do is take advantage of tutorials. So take advantage of free webinars like this. Take advantage of training courses. Now, we have a video series coming out on how to set up and use Xero. So if you're interested in that, just drop me a message and I will send you the link to register your interest. So we are breaking it down into lots of little steps. Now, there's lots of these out there. You just have to find one that's going to work for you. And again, you need to, if you want to use an app, you have to find an app that's going to do what you want it to do. Now, if you are working with an accountant or a bookkeeper, they will probably tell you the app that they want to use. And if they're going to tell you that, then they need to give you the training. They need to show you how to use the bits you need to use. And you need to work out what of it you want to do and what of it you want them to do for you. So there's all these terms that get thrown around in bookkeeping. There's your cash, inventory, loans payable, sales, payroll expenses. All of these things, they can be very, very confusing when you're used to just sales or money that's owed to you. So let's go through a few of these. Your cash is not just your physical cash. So we'll start with that one. It is the lifeblood of your business, but it's not just your cash. It is also things like any credit cards that you've got that you use for the business. It's your bank accounts. It's that cash, be it physical or in the bank, so to speak. You've then got your accounts receivable. Now, this used to be called trade debtors. It still is in some cases, but the international term is now accounts receivable. And this is basically money that's owed to you. So it is money that you are going to receive, or you should receive based on what you've done. Now, your inventory is your stock. So we in the UK, we've always called it stock. It's now inventory, but that is basically what it is. It's any physical stock that you hold to sell on to people. We've then got accounts payable. Now that is the opposite of accounts receivable. Accounts payable is any bills and things that you have to pay out. So your telephone bills, your internet bills, your software bills, things like that. Loans payable is the amount that you pay for your loans that you've got, if you've got any loans. Now, within those payments, there will be an element of capital repayment and an element of interest on a standard loan. So you have to remember that some of these terms, it sounds like it's just the loan payment, but actually it includes paying off your loan, paying off some of the interest that you owe the loan company. So it can get a little complicated. So keep it simple. It is money that you are taking off of a loan that you owe. Be that a mortgage, be that just a short-term loan. It's anything that you've borrowed and you're repaying. Next up is your sales. Now this is where you keep a track of all of your incoming money. So any work that you've done and you've sent them an invoice or you've given them a handwritten receipt, whatever it is, this is where you're going to track that money that's coming into your business. And then on the opposite hand is your purchases. Now this is where you're tracking the money that's going out of the business. So for goods that you've bought or services that you've bought or stationery or travel, all of these things. Next up, we've got payroll expenses. So this is where we track everything that's paid to employees. So their wages, any contributions you've got to make to tax on national insurance in the UK is on their behalf, or pensions. And then we have the last one, which always confuses, which is retained earnings. Now, your retained earnings is basically where we keep track of how your business has done over the years. So if you get to the end of the first year and you've made £100 profit, that goes into your retained earnings. If you the next year then make another £500 profit, then that's going to go into your retained earnings as well. So it just adds up every year. If you make a loss, it comes off every year. So it's quite a good way of seeing how your business is doing, really. It's not the be all and end all. It is just an account that tracks things along, but it's a really good one of knowing where things have been going, especially if you've been going for a few years, or especially if you're taking a hobby trade or something you've been doing as a side hustle and then making it full-time. You can actually see how that grows over time. So let's go and look at some of the areas of bookkeeping. So the first one we've got to look at is chart of accounts. Now this is basically a list of everything that's used, all the categories basically used in your business, and it's where you're going to record everything to. So it's if you've got a telephone bill come in, you're going to record it to telephone. If you've got a rent payment come in, that's going to go to rent. So it really is what it says on the tin. It is just a list of all the accounts that you use in your business. Now, the thing to remember with this is to keep it simple. Now, there's several different classes of accounts in your chart of accounts, there's your money in, so your revenue, your money out, which is directly related to your revenue. That's normally called direct costs or cost of sales or cost of something along those lines. So you've got to remember that you don't need 50 income categories. If you're only doing one thing and you just want to know the total sales, just have sales. Just keep it so it works for you. You don't need to overcomplicate things. It also has details of any assets you hold. We'll come to assets in a little bit. And it has details of any money that you owe and money that you've drawn out of the business. So this is just all of those categories that are within the business so that you've got somewhere to code it to. And when you have started putting transactions in to any piece of software, or if you've done it on a spreadsheet, then you can do a little summary page. That is the equivalent of a trial balance. Now, a trial balance sounds complicated. This is always one where people struggle, but it basically is a document where it lists everything that's gone as a debit and everything that's gone as a credit. Now, without being too complicated, basically every transaction that goes in your bookkeeping, there is a debit and a credit. So there's an in and an out. And at the end, it has to balance. So at the bottom here, you'll see these two numbers have to be the same. Now, this is basically what your trial balance is. You can use it to go and say, oh, look, I have spent £4,500 on staff training. What is that? So there's all these things you can do, but your main thing, especially if you're doing it manually, is just to make sure that everything's adding up as it should do. Now, I'm going to skip over trial balance and keep it quite simple, because generally, if you're doing spreadsheets or an accounting book, you're not going to have a trial balance. And if you're using account software, your account software will manage this for you, but it is an important step in the bookkeeping process. Okay, so next up, we've got the profit and loss. So also known as your income less your expenses. Now, this is the important one. This shows you what you've had into the business and what you've paid out of the business and what you've got left. Now, this isn't cash in the bank. It's very important to remember that because you're showing a 10 grand profit, it doesn't mean you're going to have 10 grand in the bank account. There will be transactions in here that are not going to touch a bank account, a credit card, or cash. An example of that is depreciation. That's something your accountant will do for you, which basically reduces down the value of assets that you hold in your business. So big things like furniture or equipment that you're going to use for a long time. So a computer, for example. Brought a new computer, it cost me 3 grand. It's going to last me at least 3 years. So we're going to write that down every year and take a little bit of the cost every year. So that is, although we've paid out that money, we're only showing a small element of it on the profit and loss. So this is a really good guide as to how profitable your business is. So if you ever come to sell your business, one of the first things they will ask for is your profit and loss or your income statement, so that you can actually see how you've got on, and they can see what costs you've got. So this is a very simplified one. It's data that I use just for demoing, but you can see we've got all of our costs that revolve around our establishment. So our rent, our light and heat, our insurance. We've got staff costs in there, so that's employee costs and training. We've got legal fees. We've got general admin. Now that encompasses a lot. So in there we've got telephone, we've got printed stationery, all those little bits. We've got travel costs in there. So it doesn't have to be complicated. It doesn't have to be this huge document that you look at and go, whoa, can't focus on that. It only has to be simple so it works for you. And if you're working with an accountant, they will work at getting a report that is understandable for you. And if you're doing it yourself, I highly recommend using software. And I highly recommend using a software where you like the report styles that they use. I like the Xero report styles, which all of these are, basically because I can actually go and have a look at what some of these transactions are, and it's really nice and clear. So that's really important to make sure that you're actually understanding what your reporting's showing. Now, the last report that we're going to look at in this batch, excuse me a minute. Oh dear, is your balance sheet. Now, your balance sheet is basically the business. So it's what fixed assets do you have? So this is what I was saying about like computer equipment and office equipment and plant and machinery. If you've got a factory, then you're going to have machinery and all sorts of things like that, your buildings costs. So these are things that you're going to use in your business for a long time. So over 2 years, basically. And it's big purchases. So generally, with the clients I work with, I say if you spent over £500 on something and we're going to use it for 2 years, then we're going to stick it into fixed assets. We're going to keep it within the business and we're going to write it off very slowly over the life of the asset. Now that means basically how long you think you're going to use it within your business. Excuse me. The next category we have is your current assets. Now, current assets are things that you have which are relatively easy to turn into cash. So it's your cash at hand and in the bank. So that means any physical cash you've got, whatever your bank balance is, less your credit card balances. We've also got your accounts receivable. And if you remember from earlier, that's money that's owed to you. So it's work that you've done or invoices that you've raised that you haven't actually been paid for yet. We then have what's called your current liabilities or your creditors falling due within 1 year. So basically, this is money that you owe that you have to pay within the next 12 months. So bills that you've got to pay. And there can be other things in there, like in the UK, we have VAT liabilities, PAYE for our employees, pensions, things like that. We then have a little total, which is our fixed assets and our current assets added together, and we take off our current liabilities. Now that's called your net current assets. And it's basically just the money that you've got either as a physical thing like a computer or in the bank, and then we're going to take off any money that you owe within the next 12 months. Once we've got that total, we then take off creditors due after 1 year. So these are called long-term creditors. So they're things like if you've got a loan over 5 years, then that would be a long-term creditor. And we're going to take that off of that to get your net assets. So that is basically what the business has. So it's everything that you own and everything that you've got in the bank, less anything that you owe to other people. And then at the bottom, we have a capital and reserves bit. Now, this is a balance sheet for a sole trader, so a solopreneur that's not running through a limited company or an LLP or anything like that. And this is basically what their earnings are for the year, how much they've taken out of the business, and what their earnings brought forward, that retained earnings code. And these two will balance. Now, it's very important that your net assets and your total of your capital and reserves balance, because that means your trial balance is working. And that's what a balance sheet does. It balances out what you have against what you owe. And that is essentially what a balance sheet is. Now, all of this has to come from somewhere. And the main place it's going to come from is your sales and your expenses. So let's go and have a quick look at sales. Now, hopefully my little video will work. Yeah, that will play in the background. So you have a customer that comes to you as your first customer and they say, yes, we want to actually have this product. We want to hire 20 chairs from you. Brilliant. Get their details. The first thing you must do is get their details. And then I always advise that you actually send them a quote. Get them to approve a quote so that you can actually say, once you've invoiced it and they've had the chairs on hire or whatever, that actually they are going to pay you. It seems really silly, but with all the e-signing apps that are out there now, taking that extra step to raise a quote, send it to them and get it approved will stand you in very good stead for getting payment. Excuse me. So send that quote and make sure you get it approved. Once you've got it approved, it then depends on your terms as to when you want payment. Do you want payment before? If you want payment before, send your invoice straight away so that they know, and make it clear on everything right from the initial contact that they have to pay you up front. Now, if they don't pay you up front, if they pay you after, then you invoice it after. But make sure you give them the information they need to pay you. Tell them on your quote and on your invoice when you expect payment, what the terms are for it. Tell them where to pay it. Give them your bank details, or give them a link to pay by credit card. Or if you are doing recurring payments, then think about setting up a direct debit payment so you can actually get that money in, and you're actually going to you're actually more likely to get the payments in. Now, when you're first starting in business, it's very tempting. You get so excited that you've made a sale, and you get on and you do all the work and you invoice it, and then, you know, reality hits and you've got to try and get that money in. Now, getting that money in actually can be really simple. It's just a case of asking for it. You've sent them the invoice. That's your first way of asking for it. If you give them terms, now by terms, I mean give them some time to pay. It only needs to be a short amount of time. It could be 10 days, 7 days, 5 days, whatever it is, or it could be 30 days, whatever your terms are. A couple of days before or the day before, depending on how long it is, send them a little reminder. Send them another copy of the invoice with a little reminder saying, just to remind you, this is due for payment tomorrow. If you've got any questions, just let me know. You know, it doesn't have to be all forceful. If the payment doesn't come in on the due date, then you decide how long you're going to give it before you're going to chase them again. I always say I give it a couple of days just to allow for bank transfers and things. And, you know, we all get busy and we forget things. If they don't pay after a couple of days, then I'm going to send them a statement. I'm going to send them a list of everything they owe me. And then from there, you decide your own credit control procedure. Now, that credit control is basically the process you are going to go through on every invoice to get the money in if they don't pay on time. So it can be really simple. And it can be, as I said, just a case of sending those emails on a regular basis and reminding people, and getting to a point you haven't paid, you're ignoring all my emails, pick up the phone and ask them for payment. And if you have someone who is always paying you late, then get payment up front or get a deposit up front. And if you're very nervous about it because it is your first few invoices, you know, your first few sales, then ask for a deposit up front and say, you know, I just want to make sure we've got a deposit up front. This is our standard terms. Most people will be fine with that. Excuse me. Right, so we've done our sales. Now we've got costs. Our costs are our expenses. And there's two different types of expenses. There's fixed expenses and variable expenses. They pretty much do what they say on the tin. So a fixed cost or a fixed expense is one that is the same every month. Generally, they go up, say, every 12 months or whatever. So they will work their way, they will stay the same for a set period of time, and then they could be reviewed and go up again. Variable costs are the ones that you don't know. They're going to change every time. So your variable cost could be what you purchase to sell on to customers, because that's going to depend on what you're selling. It could be your print and stationery costs. It could be your travel costs. You know, anything where it's not going to be the same every month is a variable cost. And your expenses are going to include basically every expense that's for the business. So it could be the products that you've purchased to resell. It could be your staff wages, office costs, advertising and marketing costs are always a big one, especially when we're starting. Equipment purchases, and there's loads of other things it could be as well. There's a lot of expenses that we forget about. So there's your travel costs. Now in the UK, if you're using your car, you can claim 45p per mile for the first 10,000 miles, and then it drops. You know, check it out in your country where what the allowances are, and make sure you do it in the best way that's going to be most tax efficient for you. And basically, I mean, do it in a way where you can put it through without worrying that the authorities are going to say, prove it. Also, you have to remember if you're working from home that you're going to have costs incurred in that. In the UK, we can claim £6 per week for our electricity, our light and heat and everything like that, for working from home. You can also claim things like your employee and your training costs. Now, this can be very beneficial because if you have to maintain any qualifications, then all of that goes against your costs, which is always helpful. It also makes it so that you can actually keep that training going. And if you've got staff, you can actually inspire them to want to learn more and want to progress, which in the long term will benefit you. And how about your subscriptions that you use for your business? You may find when you set up in business that there's a lot of subscriptions that you had personally that you start using for your business. So can you claim some or all of those? Could it be that you actually you're only using it 50% for business and 50% for home, in which case you just need to make sure you're allowing that in your expenses. Now, your expenses can also include bigger purchases, but they don't tend to go on the profit and loss. They will, as I said, go on the balance sheet. So this is like your computers, your equipment, things you're going to use in the business for a lot longer. But they are still an expense. And one of the easiest ways nowadays of recording your expenses is by taking a photograph. It is as simple as that. Now, there's lots of apps out there. There is Dext, there is Expensify, HubDoc, which is the one I use. There's loads of them. Auto Entry, I think it is. There's all these apps out there where you take a photo of your receipt or you email it in from your email that you've received from the supplier, and it basically processes it for you. And most of the time, it does it really well. And then you don't have to worry if you've lost that receipt, because that can be one of the worst things when you are coming to the end of the year and you think, right, I'm going to do it all in one go. There can't be that many transactions. And then you find you've lost half of the receipts and you're going through your bank statements. I haven't got that, haven't got that, haven't got that. So do it as you go along. Now, the last stage of your bookkeeping, where's my mouse gone? There we go. Last stage of your bookkeeping is your bank recs. Now, this always sounds scary. Whenever I'm doing training, the first thing when I say bank recs is everyone kind of the colour drains from their face and you see sheer panic. I don't know why, because it can be really simple. Yes, it can be complicated, but let's keep it as simple as possible. What you're doing is you're matching your sales to the money that's come in your bank account. You're matching your expenses to the money that's gone out of your bank account or your credit card. And then anything else which doesn't come into that. So money you've drawn out of the business, loan payments, interest payments, bank charges, the things that you haven't actually recorded in your expenses, but they're coming out of your business. And then what you do at the end of it is make sure that your balances to your bank statement. It really is that simple. So you've got those 4 steps. And if you do it in a logical fashion on a regular basis, you're going to find that it's actually really easy to keep on top of. If you leave it, that's when it becomes a nightmare. So I have a really busy month in January. In the UK, we have all the tax returns to do. So I left our personal bank recs, my 2 business bank recs, and another one that I had to do for a client for 3 months because of the busy time. And let me just say, I will never be doing that again. Now, I have done it before when I didn't have quite so many transactions going through my business. It's a nightmare. I was scrabbling around everywhere trying to find receipts. And this is after 15 years. You know, we can all be as organised as we can be, and sometimes things just slip. You know, we had Christmas, we had tax return season, all sorts going on, so I left it and I kept saying, no, I'll do that tomorrow. Don't, just don't, because you will just leave yourself in this hole that you've got to try and fill again, and it's actually really difficult. Now, I do bookkeeping, you know, I've been doing it for God knows how many years, 20 odd years now. I know my bookkeeping inside and out. I know my expenses inside and out. But actually trying to find those receipts and everything, it was like, why did I not just photograph these as I went? Which leads me very nicely onto hints and tips. So don't leave it till the last minute or the last second. If you've got some receipts, just process them there and then. Find some way of photographing them. Now, a lot of bank accounts, excuse me, a lot of bank accounts actually now come with the ability to attach your receipts to the transactions in your bank statement. So take a photo as you go. I know on my business account, when I've spent some money, it pops up and says, do you want to attach a receipt? It's like, well, why not? Because I'm going to lose this piddly little receipt. So I've got it there. I've got a photo on my phone. I don't need to worry. Keep your records tidy. If you're not processing them every day or every week, keep them in an organized, tidy fashion so you can find things in one place, preferably, not dotted all around your house, because things will get lost. And store your receipts. There's this technology out there now to take the photos of the receipts, so use it. Use that, excuse me, use that technology to store your receipts and keep it so you're not going to lose it. And when you need it, you've got it there. And the last really important thing, which often gets overlooked, is to keep your business and personal separate. Now, this may sound very, really, but I just paid it off of my personal credit card. It was just easier. But then you've got to track through every bank account, personal and business. You've got to track through and make sure you haven't missed any expenses. Have you got people paying into the wrong account? It really is one of those things that if you actually keep it separate, it will make your life so much easier. Now, 2 seconds, we've got a question in the chat. Yes, this session is going to be recorded, and if you've registered, which you have to get the Zoom link, you'll get it emailed to you later on today or first thing tomorrow. So, good question. Thank you for that. Right, so we are drawing to the end, but one thing I do want to look at is your cash flow. Now, as I said, your profit and loss is not your money in your bank account. Your balance sheet isn't your money in your bank account. What you need to keep an eye on is your cash flow. Now, to keep your cash flow under control means you're in control of your business and you are also in control of your expenses. Now, if you don't control your expenses, every single penny, cent, whatever currency you're in of money that comes in will fly back out again. You will find that your expenses can fly out of control very easily. Oh, I'll just sign up for this. Oh, I'll just sign up for that. Oh, it's only $2.99. Oh, that's only $1.99. That all adds up very quickly. So by keeping control of your cash flow and keeping an eye on your cash flow, you can really see where your business is going using your historic data. So your cash flow is simply your income less your expenses. So it's the money into your bank, less the money out of your bank. And it's really important to keep an eye on that. Are customers paying on time? If they're not paying on time, then what can you do about increasing the likelihood of them paying on time? Can you give them some settlement discounts? If they pay early, they'll get a couple of % off, or a tenner off or something like that. Can you start taking deposits beforehand? There's all these little tips and tricks that you can do that are going to help you keep the money coming into your bank account on a more regular basis. And the more regular the money comes in your bank account, the easier it is to balance and juggle your cash flow and manage it and manage those expenses going out. Another thing that's worth doing on a very regular basis is reviewing your expenses. Are there expenses in there you don't need? If there are, get rid of them. Are you saving up for something? And if you are, make sure you're physically putting that money away into a separate pot somewhere, separate account. And now I know a lot of accounts now have the little savings pots within them. Are you actually putting it away so you're not touching it? Now, Another thing with expenses is to make sure that you are allowing for expenses that only come out once a year. Do you only pay your insurance once a year? If you do, better make sure you've got some money put aside for that. Now, we pay all of our insurances once a year. I don't want to pay for a payment plan, so I put the money away into a pot for each thing every year, every month. I also put away a percentage of every invoice that comes in. So every person who pays me, I put money away to cover the costs that I know I have on that for tax. So in the UK, I know I have to put away 28% to cover my tax and my national insurance and my VAT. That's what I've worked out for mine, and it gives me a nice little savings pot at the end of the year. I can then pay that across to HMRC, and whatever's left is a bonus, and we generally have a treat from that. It can be something as little as a meal out, or sometimes we manage to have a day out or put some money towards our holiday. So it's a really good way of saving. So basically what I'm trying to get at here is you've got to keep what's coming in and out of your business under control. You need to be aware of it. You need to look at it. And if all you're doing is looking at your bank statements and going, yep, that's all right. And oh yes, I know what those expenses are. As long as you have that control there, that is fine. It doesn't have to be overly complicated. Just keep an eye on it and keep it in check. Now we have reached the end of this webinar. If you've got any questions, or if any questions come up afterwards, just drop me a message. You can just drop me a DM or pop a comment on the live, or drop me an email. And keep an eye out for our next webinar, which will be in 2 weeks' time, which is going to be all about creating effective systems. So this is the organisation of your business, and it's actually getting those systems in place. And it does link into your bookkeeping, because your bookkeeping can feed in to all of your other systems if you get the integrations right. And it's something that I have been very passionate about for many years, helping businesses get all of their systems talking to one another and running smoothly. So from a customer's point of view, they have the most amazing experience. And then from your point of view, from running your business, you also have this nice seamless experience that if you want information, you only have to go to one place. So keep an eye out for that. You will be sent the link to register if you're interested. And in the meantime, I just want to say thank you. Oh yes, question, please ask away. If you would like to just type your question into the chat box, Reem, and I will answer it as soon as it comes through. In the meantime, oh, I've put it in twice. If you want to book a free call with me, then just drop a comment below or drop me a DM and we can get something booked in. And if we can then have a chat about your business and see how we can help you. Now, I cover everything from accounts through to the organisation side and the your marketing, everything that a small business needs in order to grow. And we work with a lot to do with goal setting and getting your systems in place and just basically getting you to where you want to be. Now our courses and everything are all bespoke. They can be one session, they can be 20 sessions. So if you are wanting some help with your business, please just book a call and we'll see how we can help you. Brilliant. You have a friend that doesn't have an accounting background. Is that okay for her? Yes, anybody can do bookkeeping. You don't need an accounting background. You just need to be comfortable with what you're doing. Do your research. Do training sessions like this. Look at, if you're using software, find out what courses they have, or find a course that is with someone who you can work with. As I said, we've got a Zero video series coming out in the next few weeks, so feel free to drop me a message and I will give you details about that. So anybody can do bookkeeping. It really is just, if you want to do it, learn how to do it. It really can. It's so powerful for your business. And if you're going to get a bookkeeper working for you, make sure they're actually going to give you access to your information and keep it up to date, because then you can benefit from all of the figures and all of this that we've spoken about today. Actually being on top of it can keep your business from just surviving, and it can make you thrive, and it can make you soar and get exactly where you want to go. So thank you very much. If any more questions come up, please just message me and let me know. In the meantime, have a great rest of Tuesday. And I look forward to seeing you all on our next webinar in 2 weeks on creating effective systems, organising your business for success. Bye, everybody.